Here's everything you need to know about the Vancouver real estate market for April 2025. Let's begin by looking at the total number of sales. There were 2,091 sales recorded in March 2025, which is about 13.4% below what we saw in March 2024, exactly a year ago. This number is also about 36.8% below the 10-year seasonal average. This is pretty concerning because if you compare the market of today to the year ago, the interest rates were 5% in March 2025. Currently, the overnight lending rate is 2.75%. I made a video about 6 months ago talking about the interest rates predictions, and a lot of speculation was happening that we might reach 2.75% overnight lending rate by summer 2025. But here we are, April 2025, and we are already at this landing rate. However, the market is even slower than last year. There is an explanation to this slowdown in the market, and that's the economic uncertainty thanks to our neighbors to the south, more specifically their government. Because of the tariff threats and the uncertainty around Canadian economy, I see a lot of buyers waiting on the sidelines. This is not great news, especially because right now we are sort of in the middle of the spring market. Usually this would be the busiest time for the buyers, for the sellers, and in general for the real estate industry. And having another spring market sort of delayed / canceled is definitely not a great thing, especially for the sellers. On the positive side, doesn't look like a lot of sellers were panicking and really listing their properties for sale. If you look at the number of new listings on the market this month, we saw a total number of 6,455 newly listed properties. That number is about 29% higher than March 2024. So yes, it is much higher than what we saw last year. However, this number is about 15.8% above the 10-year seasonal average. So in general, the number of new listings is not that high. Now, one of the reasons why this number is so much higher than March 2024 is because of the expectations for the market. Back in March 2024, the expectation was that the market is going to pick up, that the prices will be picking up because interest rates were about to get reduced. And that was partially correct because in May 2024, we started seeing interest rate reductions. And of course, now we are at a much lower interest rate. The difference to March 2025, however, is the fact that the expectation for the market is uncertain. Nobody can with certainty say that the prices or the market is about to become stronger. That all depends on the tariffs and a lot of economic sort of conditions that are outside of our control. And that's one of the big reasons why we have so much uncertainty. And that's one of the big reasons why we have way more listings this year than we had last year. Last year, we just had fewer listings than usual. So right now, 16% above the 10-year seasonal average is not awful. However, if we take a spotlight off of new listings and we look at the total number of listings, the number is not as optimistic. So there's a total number of 14,546 listings on the market in March 2025. This number represents about 37.9% more listings comparing to March 2024. Quite a big increase. This number is also almost 45% above the 10-year seasonal average. And all of this is due to the fact that we have a lot of leftover inventory. We can see that the new number of listings is about 16% above the 10-year seasonal average, which is still above the 10-year seasonal average, but it's not that much higher. At the same time, having total number of listings 45% above the 10-year seasonal average tells us that a lot of leftover inventory has not been cleared and hasn't been taken off of the market. Usually in Vancouver, over the last 10 years of my real estate career, actually 11 years at this point, what I see is that sellers try to sell their property. If it doesn't sell, within a few months, 6 months, 7 months, people usually take those listings off the market and they try again in the spring. Well, here we are, it is springtime and the listings are not selling that well. And that's why we see this sort of buildup of inventory. This is good news for people that are actually looking to buy something right now. This number of people, this pool of buyers is smaller than usual, way smaller than usual, but there are still buyers in the market. And right now they're having a pretty good time. Much better buyer conditions than we've seen in the last many years. In fact, if we look at the sales to active listings ratio by the property type, for detached homes, it's about 10.3%. For attached homes, it's about 21.5%. And for apartments, 16.2%. As you can see, attached homes, we're talking about duplex units as well as townhomes, is the most active segment of the market. And historically speaking, this segment of the market has been fairly resilient because it relies very little on the investors. Usually families buy townhomes, and economic conditions, of course, affect this market quite a bit, but they don't affect it as much as they affect the investor portion of the market, the condos and the detached homes. So seeing this strong of a sales to active listings ratio for the townhomes is not surprising. And if you are a buyer out there in the market right now looking at townhomes, you probably are a little surprised because you keep on hearing all this news about the market being historically slow, high inventory levels, low sales. At the same time, you probably look at townhome after townhome, and then a few weeks later, the townhomes sell. Unfortunately, that's what's happening if you are a buyer, but fortunately, if you are a seller. And in fact, I think right now, the people that are winning the most in this market are the townhome owners who are upsizing from a townhouse to a detached property, because the townhomes are still very active. They haven't gone down in price too much. They're still fairly easy to sell. At the same time, the detached homes are pretty slow. They're in fact in a buyer's market territory, which makes it much easier to negotiate a stronger deal for a detached property, at the same time not lose out too much money on your townhome. So it's a pretty good time to upsize from a townhouse to a detached property, probably one of the better times I've seen in my career. Looking at the prices, they stayed about flat. So we don't see too many price drops, even though the market is fairly slow. By the property type, for detached homes, the prices have increased by about 0.8% in the last year, and they have decreased by about 0.4% in the last month. I wouldn't read too much into this. These are statistical anomalies because the sales are so low. For apartment prices, they have gone down by about 1% in the last year, and they have gone up by about 1% in the last month. Again, the market is about flat. This statistic is, it's not really telling us too much about the story of exactly what's happening. If you want to know, you have to look at specific buildings, specific neighborhoods, and specific apartments. Lastly, the attached home prices, they have gone down by about 0.8% in the last year, and they have gone up by about 0.2% in the last month. Again, the same story here as with the other two property types. I wouldn't read too much into these price increases or decreases. You have to look at specific complexes, specific neighborhoods, and specific types of properties. Lastly, let's talk a little bit about the market moving forward. A lot of this is speculation. Take it with a grain of salt. I don't know where the market is moving. In fact, nobody knows where the market is moving. If you knew, you'd be very rich and very successful. But the way I see it, we sort of have three different paths. One way the market resolves itself is by tariff threats going away, the tariff war sort of fizzling out. We can get back to normal, quote unquote, and we should see more buyers enter the market as the sort of buyer sentiment improves. The other two paths are, number one, the tariffs get much higher. We get this sort of blanket 25% tariff. In that case, it is very uncertain exactly what's going to happen with the market, where the interest rates are headed. Generally speaking, Vancouver is pretty resilient against the tariffs. However, Vancouver is still part of the general Canadian economy, and of course, we will still be affected. So that is creating a lot of uncertainty. Chances are the market will be very sluggish moving forward if this big tariff is applied. And the last case scenario, probably the most likely case scenario, the fact that we will see some tariffs, not other tariffs, sort of what we are experiencing right now. And depending on what type of tariffs are applied, the market will react accordingly. Chances are people will sort of get used to what's going on with the neighbors to the south. They will sort of get used to all these threats and continue life as usual. And at some point, the market will start rebounding. And the time will tell what will actually happen with the real estate market. I'll try to keep you updated on this YouTube channel. If you want to see those videos, please subscribe. Also give this video a thumbs up if you enjoyed it. And if you're looking to start your search for real estate, you just don't know where to begin, I have an absolutely free buyer's guide linked in the description below. Check that out. Also, if you just want to shoot me an email or shoot me a text message with some questions about real estate, I'd be happy to help. Thanks for watching, and we'll see you next time.